Good morning, traders. Rick here with our morning video blog. Thank you very much for being here. Today's Tuesday, September 22nd, 2020. Right from the get-go, I want to remind everybody that today, again, this is Tuesday, September 22nd. Today at 11:45, I'll be hosting a webinar intraday. That's 11:45 Eastern. We'll be talking about what's the market up to this week, current trades, trades we're considering, and of course we're going to be talking about our number one trading tool that I highly recommend to everybody. That's 11:45. If you check below the video, there's if you click on View More or See More, something like that, it opens up a page. And I will put a link at the very top to register. Now you do have to register for this, but you only have to register once, and then you'll be reminded each week we do this, and we do this every Tuesday at 11:45 Eastern. So if you're interested, make sure that you register. And by the way, if you can't be there, go ahead and register, because we will be posting the recording for you, okay? All right. So yesterday, ouch, a lot of folks got burned yesterday. Woke up Monday morning, and the market gaps down. You know, sometimes yesterday there was several traders that I know of that were really beating themselves up because they were just down, and you have to realize that you can't. There's sometimes you can't protect against some things like that where we just move down. It happens. You know, there's about 243 days in the market to trade, and not every day is going to be a winner. Not every day by any stretch is going to be a winner overall for the day. You may have winning trades, but you'll also have losing trades. But overall, there's just not going to be a winning trade. So let's just get back on our horse. Let's solve this problem. Remember, you have approximately 243 days a year, approximately 20 days a month to get things worked out. And it's extremely doable. Very, very doable. All right, so yesterday on the SPY, we ended up with a very nice hammer. Quite clean, quite organized. I mean, that's a good-looking little hammer there. Intention of the bulls seem somewhat good, trying to come back. Looks like we're going to open up a little bit higher this morning. But please, 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 let's think about this. We have a high right in here. I'm going to call this a failed high. And we've moved up here. We've got another failed high. Basically, what we have is a downtrend. We have a downtrend. It is bearish, and what we are having, what might appear to be a little bit of a rally. But right now, I'm going to take this as nothing more than a relief rally. We need to get through this downtrend before we. I'm going to actually draw that more like here. We need to get through this downtrend, so we need to break out and we need to test before we can really, really, really get bullish. There's nothing wrong with trading a relief rally, nothing wrong at all, and a lot of good money can be made. We need to watch this for a blue ice failure. A blue ice failure is right here at this 50-day simple moving average, the blue line. If we start to see that, then we want to watch those shorts, want to be in a few shorts and make a little bit of money. Right now, at this moment, I'm a little fearful that we're still going to come down to the 200 period moving average, which is down here about, we'll call it 310-ish area. So be a little bit careful. Be mindful that we have a downtrend here, okay? Now, on a positive note, let's take a look at the weekly chart. The weekly chart, we pulled back down right to the trendicator. Perfect area for a little bit of a bounce. We also, let's see here. There we go. If we take this the June highs and go across, we pulled right back down to those June highs as well. So this really is a good area to bounce. And it is very possible that we run up and test and get bullish. But I just want to remind everybody that we have this downtrend that really needs to be cut through. And this area, 342, we talked about this all last week, multiple times during the day, that every day here, that 342-ish, 342.50, this is imperative that the bulls get across. So even if we get through that 50-day simple, we're still going to need to get through this 342. But if we can rally from there to here, that's a very nice money-making relief rally. Let's take a look at FNGU. FNGU actually held itself up pretty well yesterday. We came down and tested these lows again, popped back up with a nice little bullish candle here. And FNGU, I feel we need to get above that 186 maybe, 186 level. So what we would be looking for as far as some price action and chart pattern is a rally up. Doesn't have to happen today. Could happen later this week, but we need to see that rally up, and then we need to see a test here, and then watch for those bulls to step in. That would be kind of like a green light that the bulls are really, really serious. Anything below the trend indicator, these red dots, that tells me that the bulls, well, they may be trying, but they're not that serious. So we'll be watching FNGU very, very close. VXX, this is the one I like to trade. VXX, it gets these daily pops, maybe even a couple days in a row. But the reality is it shows absolutely no fear. And until VXX shows fear, the VIX family, until it starts showing some fear, the market is just not going to fall apart in a bad, bad way. So we also watch this, and we'll keep an eye on it. Okay, let's do I've got, I think it's 11 trade ideas. But first, let's take a look at SDS. I closed this out yesterday for 38%, I believe it was now. Here, I can check maybe. Nope. Yeah, I think it was about 38%. So I closed my SDS out, took a very nice little base hit on this. I'll let it pull back, gain a little buyer in here perhaps, and then I'll look to buy it again, assuming the market does start to pull back a little bit, and that would cause SDS to move back up. We've got a few of the inverse attached to our live trading alerts scanner. So we're alerted throughout the day when it's starting to move, and that's what I'll look for, is when one of those are starting to move, such as SQQQ maybe, or TZA maybe, or SDS. And there's an array of others that we're looking at as well. And when they start to trigger a buy, that's when we'll start to look for that buy. But right now, with this gap up, shooting star up here, it was just smart money to pull that money off the table, collect that 38%. All right, let's take a look at some trade ideas. Target. Target is, nice big move up. We've pulled back right to the trend indicator here, and now we're moving sideways. We have a little morning star pattern right in here. So I'm looking at this for a possible breakout of 149.90. 149.90, we take out these highs, these lows, and we can get up to the 155.90 area, and then even up a little higher. A 10% move from this area here up here to 165, 164. That could be very doable for target up here. Here's a slow mover, pretty slow mover. Certainly not an exciting stock, Whirlpool, right? But you know what? If the chart can make you money, the chart can make you money. Nice move up. Here we've pulled back. Trend indicator's green. We pulled back below the trend indicator. Trend indicator turned red, and now we're back above the trend indicator with a slight little dip. It got caught in yesterday's move to the downside, close to that 50-day simple moving average. If I start to see positive trading on Whirlpool here, let's just, something up in 191. Actually, let's get up into the $200 mark. That is very possible. And that's getting you up into 15% profit on Whirlpool. Another one that we're watching, we've got this on the watch list, is Progressive Insurance. Beautiful trend here. And it just, it comes down and makes these little pullbacks. The buyers step in and they lift it right up. Well, here's a little pullback, and here's the buyers starting to step in, and it really hasn't run yet. It hasn't taken off. It's still in that buy area. Watch for the $100 mark to be tagged, and beyond the $100 mark, watch for about 107 up here. 107. That might be a nice little trade to make here on Progressive. This is a nice little. Let's see here. It's probably out of the trap. Yeah. See, it's out of the trap area. But I still would look at this a little bit on an inside day maybe. So we should put the buy box up. There we go. Put the buy box. So we see some trading in this area. Progressive might be a nice little trade. LH is also one setting up. Let me get rid of that 3 EMA. There we go. We are below the 50-day simple. What I'm looking at is the price action and the fact that we've come off the 200-day period moving average down here. So we've rallied up to the 50, failed it. We've pulled back, but we seem to be holding here. Yesterday was a nice bullish candle, bullish engulf. And our trend indicator has turned green. So what I'm looking for is positive trading. And positive trading with a little bit of follow through could get us up into the 190. Just taking these highs right in here, up into that 190 area, and maybe even 198, 200 up here on LH. DGX, a fabulous day yesterday, terrific day. This is another one that's coming off the 200 period moving average. We've had a nice, let's see here, let's make this red. We've had a nice move to the downside. You can see that with the trend indicator here. And now you can see the trend indicator is turning green right in here. And a big move yesterday. Now, ultimately, we want this to get above the 50-day simple moving average. So let's just put a line right in here. Ultimately, that's what we want. So let's watch for that follow through, maybe a little bit of a test, and then that might be very buyable up into this area here. I get it. Let's see. If it ends up on an inside day today, if somebody wants to buy it, you know your rules. If it gets below yesterday's low, then that would show that the bulls were not serious, and yesterday was just a one-day wonder type candle. So just trade by your rules. And that's, in this market, I think it's very important, in all markets. But in this particular market, I believe it's really, really important. We've got so much news out there that could just change this market in a second. And we have to have those rules in place to get out of charts that are moving against us. We need to get out of them quickly so we don't take big losses. And we need to sell into strength or base hits, take some money as we move up to protect some of those profits. That's the ultimate protection. Okay, Caesars. Caesar might be setting up. Caesars had a great move here a few weeks ago, back last week, and here we've pulled back right to the trend indicator line. Our dots are still green. A nice little hammer in there yesterday. It looks like we're going to open up about this 54.85 area. And if we can show strength above yesterday's candle, Caesars might be a nice chart to look at. Watch for this 59.50, and then Caesars could get back up. Let's make a little adjustment here. Let's move this. And, here's a little 20% move, around that 65 mark. So Caesars starts showing positive trading over 54.50. Once we clear these highs back over here a few days ago, then watch 65 as a nice little swing trade. If Caesars was to pull back, I wouldn't have a problem buying it in this area here, but my stop would be just ever so slightly below yesterday's low. Penn, let's throw some Penn in there. Penn has been in a nice move, and it pulled back right to the T-line here. Gave us a little doji yesterday. I think if we start seeing, let's see here. If we start seeing a breakout over yesterday's high, that could send Penn right up into the, darn near $90. And then we'll look for $100 after that. So let's keep an eye on Penn. That could be a nice little 20-25% move there. FSLY is another one that had a great day yesterday. Broke out over the 50-day simple moving average. So let's just put a line right through here. What I'm going to want to see is positive trading to make any money. Now, for a entry, I'm going to put the buy box just slightly above, but I'm also going to come back down and tag that 50-day period moving average here. Because a big day like yesterday often will give us a little bit of relaxation the following day. So we're going to see a little bit of a pullback, I think. That certainly appears the way it's going to open here inside the box. Watch for those buyers to step in over the next few days. Assuming they do, this might be a nice buy in this area. We'll put here, let's change this. Whoops. There we go. There we go. Watch for those buyers, and then maybe even make an entry above that breakout area. This is the kind of stuff we're going to look at here at Hit and Run Candlesticks and Road to Wealth. This is what I'm showing here. Our trade plan on how we might trade a few of these charts. NVTA, nice little pop out of the box forming. So this is the box. The pop has yet to come. The pop is when it breaks out to the upside. Now there's two places to buy this. One place could be inside the box, and the other place could be on the pop, right in here. So if you look at this, you can see that we've broken out. Broken out quite nice. Up we go, and now we're resting. This is the box. We'll watch for a buy inside here, and we'll also watch for a buy on the pop. FDX, FedEx had a great day yesterday, holding up on the 17 EMA or the trend indicator right here. Nice little hammer candle. I'm kind of thinking that on FedEx, we're going to need to clear these lows. So above 2160, FedEx could be a nice winning trade. Rally up and challenge this high, and then possibly follow through up into the, say, the 10 to maybe 15% area up here. And the last one I have is D-Dog. let's get rid of some of that. There we go. D-Dog has been below the 50-day simple. It's rallied up. It's pulled back. Very nice day yesterday. Good candle. What we need to see is follow through here. So I think what I'll do is put the buy box. I'm going to come way over here. Put the buy box in there. So we start seeing buying in this area. I may look to buy it. On a breakout, I might look to buy it. Stop-wise, I like it because of this candle, because we rallied up, we pulled back, and the buyers are buying it right about that 50-day simples when they started, a little below. So where would I not like it? Well, I wouldn't like it if it started trading back below about 85.60. Alrighty. Hey, again, I want to remind everybody, check the link below. Today is Tuesday. For Tuesday's intraday webinar, we'll be talking about what the market is up to this week, current trades we're considering, and of course, our number one trading tool. And I'll put the link below. You must register, but you only need to register once. We will send you a reminder out each Tuesday. I think the reminder goes out on Mondays, reminding you of the Tuesday webinar at 11:45. All right, you guys all take care. Good luck trading today, and I really hope to see you in the trading room. Thank you.